Welcome back to the channel for your stock market update on January 22nd, 2025. We have lots of breaking news to cover here in this video, including 1,500 U.S. active duty troops are being sent to the Mexico border. Trump is proposing a 10% tariff on China. The S&P is hitting a new all-time high. There is an up to $500 billion AI investment that will be taking place over the next 4 years, and what could be the elimination of the federal income tax. We have all of this news, all of your market updates, and what this means for stocks. Because ultimately, if you are a viewer of this channel, you are invested in the stock market, and that's what matters most to us, at least for this channel's purposes. The Trump administration is sending up to 1,500 troops to the Mexico border, but there has not been much as far as, or at least in the news, of the immigration raids. That is something that Wall Street was a little nervous about. If you really tried to send millions and millions of people out of America, that could be bad for the labor market, that could be bad for economic activity, and some people say that could be bad for inflation. It doesn't seem like that has happened yet, so Wall Street remains, well, undecided on how immigration policies will affect the economy. And Donald Trump says that he is considering abolishing the federal income tax, according to the New York Times. He actually talked about this on the Joe Rogan podcast. He did this on the election campaign in October, if I recall. And he says on the Joe Rogan podcast that the last time that America was truly wealthy was really in the 1860s to the 1890s, long before there was a federal income tax. And it was William McKinley, the president that was assassinated, that really was a big advocate for tariffs over taxation. And in fact, fun fact, the last time we were this wealthy as we were in the 1880s was around the same time that we bought Alaska. Alaska was purchased for $7.2 million. It was purchased for 2 cents an acre. In inflation-adjusted terms, this is equivalent to $129 million today, or about 36 cents per acre on March 30th, 1867. We were in a position to do that because the government was relatively wealthy at the time. And that turned out to be the best acquisition of all time. But if indeed the government, or Trump, did away with the federal income tax, I know that's down the road a bit if that were to happen, that would be a massive positive for the economy. Why? Because the government is terrible at spending your money. They spend money, they have a terrible return on investment. It's negative. For every dollar the government spends, we lose money on that. People spending money and getting back to the roots of capitalism would be a huge positive. Entrepreneurs, they make money with the money that they invest. Okay? Citizens spend all of the money that they make. So if all citizens now have a couple extra $1,000 per year to spend, that's going to be really good for the economy. And it doesn't have to be inflationary, because the government, again, is really bad at investing money. The question would be, how small does government need to be to really eliminate the federal income tax? You would definitely have to have a much smaller government than we have today. And how would tariffs work in that equation? And late last night, around 6 p.m. after markets closed, Trump proposed a 10% tariff on China. If you've ever read The Art of the Deal, you don't go publicly or go even speak about your actual proposal. You always set the bar higher. Just like when you're listing a home. You don't list a home that you really want to sell for $420,000. You don't list it at $420 and say, that's my bottom line, I'm not going lower than that. You list it at like $450. So then you can go down to $420,000, and the one buying it thinks they got, almost a 10% discount, and you're really happy because you only wanted to sell it for $420,000, right? 10% China tariff being proposed really means you're probably not going to get any tariff at all, at least initially. The areas that will be tariffed are specific industries. And I think that's why stocks are advancing to a new all-time high today. As you can see over here on CNBC, the Nasdaq is up 1.31% today, S&P is up 0.69%, and the Dow is up 0.25%. What's interesting though is the Russell is down 0.5%, and the VIX is up about 1%. That doesn't make a whole lot of sense, and I don't have a strong theory for why that's happening. Besides, 10-year Treasury yields are up about 2.5 basis points today to 4.60%. So that's typically a negative for small caps. Not a huge understanding of why that's happening though. Could be the 10% tariff proposal, or who knows really when it comes down to it. Oil is down about 0.5% today. Bitcoin is also down about 2% to $104,000. Last night, Trump says that he would like to see federal land opened up for data centers. And the big announcement yesterday that Trump announced was a $100 billion private sector investment led by OpenAI, SoftBank, and Oracle for AI infrastructure, with Stargate Venture to invest up to $500 billion over 4 years, starting with a Texas data center. Some people today say that $500 billion isn't even possible. If you look at the cash on all of these companies' balance sheets, it's like $50 billion. And some people say Nvidia is not going to invest all too much. But Microsoft's CEO said today that he has $80 billion. That's all he knows to invest. He don't know about other companies, but Microsoft is investing $80 billion this year alone in AI. Dan Ives, one of the top tech analysts in the world, says Stargate: "We believe this is the start of a wave of massive AI investments, $1 trillion or more, to take place in the US as we expect more big tech names to make announcements. As Project Stargate takes hold, this is bullish for Palantir, Microsoft, Oracle, Dell, Amazon, and Google." Trump also says that if Putin does not come to the negotiations table, how to end the war in Ukraine, taxes, tariffs, and sanctions will also target anything being sold by Russia to various other participating countries. Amazon is shutting its operations in Quebec, with 1,800 losing their jobs. This probably has something to do with the expected tariffs that will be put on Canada. Companies reporting earnings today and after hours include Kinder Morgan, Alcoa, Discover, Steel Dynamics, Cadence Bank, Horizon Bank, and Cathay Bank. Tomorrow pre-market, GE Aerospace, American Airlines, Huntington, Allegiance Health, Alaska Airlines, United Pacific. Thursday and after hours, Texas Instruments, Intuitive Surgical, CSX, and other smaller banks. And then Friday, you have Verizon, American Express, and Next Era Energy. And for the first time in over a month, CNN's Fear and Greed Index went out of fear into neutral. It was at 45 just a few minutes ago. It has dropped back down to 44 in fear. But for the first time in over a month, markets at least went into neutral briefly. You've been in fear or even extreme fear for over a month, which is crazy. Market momentum is neutral. Stock price strength, extreme fear. Stock price breadth, extreme fear. Put and call options is neutral. Market volatility is neutral. Safe haven demand is greed, and junk bond demand is currently in greed. Percent of stocks trading above their 50-day moving average is down about 1% today to 47%. So 53% of stocks are currently in an active decline. Those are some pretty extreme numbers. Your AI investor sentiment survey, a new one, will be coming out tomorrow, but on last account, 25% of investors expected the stock market to be higher in the next 6 months. That is the most bearish number we have seen in a long time. When only 25% of investors are bullish, that is precisely when you want to be buying the crap out of markets. 34% of investors are neutral, which you almost never see the neutral category higher than the bull category. Definitely not by a 9% spread. That is ridiculous. And bearish investors at 40.6%. That was your 1-year bearish high. So even though the S&P is hitting a new all-time high today, there is still a lot of reason to expect markets to continue higher. As I said, heading into the inauguration, after the inauguration, we were going to see a rally. That was my opinion. What happened? Well, you were up 1%, and then you were up 0.92%, and now today you're up 0.68%. The breakout confirmation was the break of this trend line. That happened the Friday before the inauguration, and the last 2 days, we have ripped to new all-time highs. That was my expectation. But I do think as we get more information on tariffs, as we realize it's not as bad as we think, the economy is strong, inflation is making progress, the Fed's going to be able to cut rates multiple times this year, earnings are strong. I mean, this earnings season has been stellar. Just look at Netflix. I mean, that stock today is at $960, up over 10.5%. They grew subscribers twice as fast as Wall Street was expecting. There's no reason to doubt this market. There's no reason to be bearish during this strong of a bull market. Now, when everyone is bearish, pretty much as they have been recently, it tends to lead to overly aggressive rallies. And I don't think we've seen an overly aggressive rally yet. I think we need to rally further from here. But I do think it's going to be a broad-based rally, not just a Mag 7 rally. Like with Apple. Apple's been under a lot of pressure recently. I would expect that other big tech names are going to have their moment and also go under pressure at certain points. And we will see a broader based rally. Jamie Dimon today at the Davos International Summit says the US stock market is kind of inflated. He notes risks from deficit spending, inflation, and geopolitical upheaval. And also being reported today, a record number of consumers are making minimum credit card payments as delinquencies also rise. The share of active credit card holders just making minimum payments rose to 10.75% in the third quarter of 2024, the highest ever in data dating back to 2012. The share of card holders more than 30 days past due rose to 3.5%, an increase from 3.21% for a gain of more than 10%. Even with rising delinquency rates, it's still well below the 6.8% peak during the 08-09 financial crisis and not yet indicative of serious strains. With that said, we do have important economic data coming out tomorrow morning. That is initial jobless claims. Markets are expecting 220,000. A number lower than that is going to be seen as likely positive. A number higher than that is going to be seen as likely negative. We also get continuing jobless claims. That is expected to tick up by about 1,000. So not much of a change is expected there, and that is the continuing jobless claims. We do get a lot of oil inventory numbers coming out tomorrow that could move, USO oil prices tomorrow. And we do get a 10-year TIPS auction. These are Treasury inflation protected securities. So what this auction comes in at is kind of like a 10-year inflation expectation. Okay, so that data could be important. That comes out at 1 p.m. Eastern Standard Time. And then on Friday, we will get existing home sales for December and existing home sales month over month. And then final numbers for the global composite PMI. These are new numbers for global composite PMI flash for January, manufacturing PMIs for January, and global services PMIs also for January. We will get the Kansas Fed Composite Index and Kansas Fed Manufacturing Index as well, coming out at 11 o'clock in the morning on Friday. And last but not least, the dollar index is up about 0.1%, but it has recently fallen at least somewhat from the all-time high, not the all-time high, but the recent high on January 13th. You're down about 2% from that relative high after the dollar has climbed about 10% since September, October. That has been a negative factor on our markets, and it's starting to fall. That, if it continues, will allow markets to move higher. You're testing the 50-day moving average. You bounce there. You found support today. If you can fall below that 50-day moving average, and start to make your way lower, again, that's going to open the door for small cap outperformance, biotech outperformance, multinational outperformance. So let me know what you think about this information down below in the comment section. Again, in regards to the S&P, I think markets are going higher from here. Sure, could you consolidate a bit at these new all-time highs? Of course, we're very headline sensitive right now, specifically with tariffs, immigration. Those are going to dominate the headlines. The RSI is at 60, so you're definitely not even close to being overbought. And the advanced decline line is showing some strength with the relative low that you had on December 19th. You have kind of recovered a little bit. This is the advanced decline line. So it does look like stocks generally are moving in the right direction. Let me know what you think about all of this information down below in the comment section. Ladies and gentlemen, have a fantastic rest of your day, and I will see you in the next one.